Hey, welcome back to another episode of the Loan Officer Leadership Podcast. I'm your host, Steve Kiles, brought to you by and powered by the Mortgage Marketing Animals. And so excited to have you on today's podcast episode. I felt like today was really a timely topic. And what I've called it is talking points, how to have educated conversations with buyers and realtors and partners in today's rising rate environment. And here's what I'm finding. There are a lot of things that are happening in the market. And as I'm recording it today, there's conflict with Ukraine and Russia, concerns over, you've got digital currency, you've got cryptocurrency, the market's up and down, rates are going up. If you're listening to this right now, 3 to 5 months ago, rates were in the low threes. Right now, you're paying points, if not multiple points, to be at 3.99. Most lenders are in the high three, running into the low 4% rate. Inventory is low in the marketplace. I have a good friend of mine, Andre, had an open house this last weekend. And in his open house, it was crazy. I think the numbers were something like 70 people attended the open house. They had over 13 offers made to accept one contract. And you may think, man, with so much going on, there's probably, how do I talk to customers? How do I talk to clients? How do I talk to agent partners, agents? How do I talk to my buyers and sellers? And regardless of whether you've been in the market or in the industry for a long period of time, or whether you're relatively new, I wanted to share something that I do that absolutely is helping me and helping my branch. I'm a producing branch manager. I've got a local team in the Houston market that produces, as well as a national branch, loan officers across the country. And so here's some of the things that we're talking about that I really feel like is going to help you in having great conversations. You don't have to know everything about the market. You don't have to be glued to the news 24/7. I used to think, hey, in my office, I'm going to leave CNN or Fox News, or there's actually a channel that has all of them on one screen. So it's got like 10 different, networks on a screen. I got to watch it to consume all of the negative news in order to know what to have great educated conversations about. And I just don't believe that's the truth. I don't believe it's the case. I'm not a fan of it at all, because here's what I know, man. The more I watch the news, the more discouraged I feel. The more, it's so divided. We're a nation divided, a nation, you hear all the war and the politicking and all this stuff going on. And so let me tell you how I do it. Whenever I'm in the market, I'm looking for key pieces of content that become my talking points. And these will be my talking points for, probably 3, 4, 5 months until I actually go in and replace them. And for those of you who are watching, I always post these in our Facebook groups, but I actually have, you'll notice I'm holding up my phone and I've got a thing called talking points. And I literally jot down talking points from things that I'm watching, listening, and seeing on a daily basis. And then what I do is I pull up the top 10, and those are just what I talk about. So let me give you an example. If I'm looking in today's marketplace, I want to sound educated, not just sound educated, but be educated. I don't want to be overwhelmed with the negative news and all of the things that are happening. What are the conversations I'm having? Because we're hearing rising rate. Clearly they are. So one of the things I'm going to do is I'm actually going to get into the Loan Officer Leadership Podcast, where we talk about those things. I know in episode 156, I talked about a rising rate. What are the top 5 buyer objections? Make sure you go back and listen to that Loan Officer Leadership Podcast, episode 156. But when I'm talking to clients and they say, hey, Steve, what's going on in the marketplace today? I love having these things to talk about. So let me give you the first 10. And then if they help, these will be great conversation starters. When I'm talking about a rising rate environment, of course, interest rates are going up. This is not one of the 10, but this is how I would use something like that. It's, hey, rates are going up, concerns of inflation. Inflation creates long-term pressure on a 30-year fixed mortgage rate. And what we're seeing is there's 3 times in history where rates have actually been under 4%. We've just been really spoiled over the last 20 years that those under 4% rates have happened in the last 20 years. They're in 3 to 5 year windows. And so even though we touched all the way down to 2.5% on a 30-year fixed, with rates being in the high threes, low fours, it's still the right time to buy. And here's where I start using my talking points. So let me give you an example. Mr. and Mrs. Buyer, Mr. Agent Partner, did you know that the National Association of Realtors was literally talking? I was reading through several, just publications. National Mortgage Professional, First American does a phenomenal job about putting out economics. National Association of Realtors puts out their reports. And this is something I read literally just a few weeks ago, that year over year, nominal house appreciation reached 21.5%, the sixth consecutive month of growth in appreciation at these levels. And so so that's one of my talking points. Year over year, price appreciation reached 21.5%. It's the sixth consecutive month of new records. And one of the things that I'm using is in my conversation, I'm talking about, hey, year over year appreciation, it's over 20%. Actually, it's 21.5%. Now, I know you may be local to the Houston market, which is the market I serve. And so it may be as low as 15%. Some areas 18%, some areas 22%. But on average, the year over year appreciation nationally has been 21.5%. That's a great talking point. Why? Because appreciation at that level helps people understand, even if rates go up to 5 or 6%, you're far outpacing building wealth through appreciation than you are paying a few percent higher in interest rate. Remember that mortgage interest rates are tax deductible. So even if rates go up, now is still a great time to buy. I love using that talking point. Here's another one. Affordability declined 21% compared to a year ago. The reason why that's important to talk about is because as affordability continues to decline, you're going to see that a buyer who could buy a $300,000 house today will only qualify for a $280,000 house tomorrow. And it doesn't mean that their qualification has dropped. It means that the cost of ownership has gone up. As property taxes went up, as homeowners insurance has gone up, heck, even as the home owners association fees have gone up, as the values have gone up, as the rates have gone up, it makes affordability less. It's a great talking point. Affordability declined 21%. So when I'm talking and where it's relevant, I may say, hey, listen, rates are going up. We're in a rapidly rising rate environment. And even though it's going up year over year, 21.5%, I mean, the rates are going up to, low fours. The year over year appreciation is going up 21.5%. Mr. Buyer, if I'm buying, now is a great time to buy. Hey, and it's even more important that we buy now because affordability has declined 21%. And so when you're thinking about buying the house today, what you buy today, you'll get less for in the next year. Like if I choose to rent today, instead of buying, I'm going to buy less house for more money in the next year. So if you were thinking about buying now is a great time. And I find that most consumers don't realize you can buy a house with less than 20% down. That may lead me into other things. So talking point would be year over year appreciation, 21.5% nationally. Affordability declined 21% this year over year. Incomes have only increased 4.4%. And the reason why that's important is, Mr. Buyer, again, if you're buying, I would buy now because you can truly buy more house. You'll be able to lock in not only the interest rate, but even when you buy a house, it freezes your property taxes because you now it doesn't freeze it indefinitely, but it keeps a cap on what it can keep increasing. People don't think about homeowners insurance. They don't think about the property taxes. They don't think about HOA and other things that when you get in a home, the day you get in the home, there are types of caps that start happening. Like on a property, if you own the house as a primary residence in Texas, they can only go up a certain percentage each year. They can't go up from the amount. Like I think it's 10% is all it can go up, not the 21. It may increase in appreciation. So some of my conversations are year over year appreciation 21.5%, affordability declined 21%, incomes increased only 4.4%. Here's another one. Hey, it's a rising rate environment. What that means, Mr. Buyer, as the Fed continues to taper back their purchasing policy. Many people have heard that the Fed's going to short, that they've got up to 4 cycles. They're going to increase the Fed funds rate, the interest rate with the Fed. And so as they continue to tighten its monetary policy, you're going to see that interest rates are going to go up because they're not artificially keeping interest rates low. So we are definitely in a rapidly rising rate environment. It's a great talking point. We need to be having the conversations that that rates are going up. That's because inflation is the arch enemy of mortgage rates. Inflation means the gallon of milk I buy today or the gallon of gasoline I buy today is going to cost me more in the next year because the cost of that dollar goes up. It's inflation. So when you've got a fixed mortgage rate that's fixed for something like 30 years, 15 years, 20 years, that means it's worth less to the investor because inflation means the dollar of the value is worth less. So rising rates, that's going to be 1, 2, 3, 4. That's my 4 talking point. Hey, we're in a rapidly rising rate environment. If I were going to buy, I'd buy now. The next one. So we've got number 5, buying power. Mr. Buyer, if you're looking at buying a home, buying power will end up falling $25,000 to $52,000 over the year over year. What that means is as rates go up, as appreciation on the homes go up, and what you could buy today cost more tomorrow, it affects your buying power. $25,000 to $52,000 is the range that you're going to see an affected buying power over the next 12 months. That's a great talking point. Hey, here's another one. Average household incomes are right at about $70,000. So you're going to see that they're holding. You're not seeing a lot of growth in your average household incomes. It's $69,800. Maybe higher in your area, lower in other areas, but it's something that's a great talking point that if I'm buying again, I'm going to buy now because the average household incomes continue to hold. Even as prices go up, even as rates go up, you're going to see your buying power and affordability decline 21% in a rapidly rising rate environment. Here's a couple more, and then I think this will be a great episode. I hope it helps you when you're thinking about conversations. But I was just reading in Forbes literally this weekend, home sales are expected to increase another 6.6% in 2022. So even though people may feel like, when can this stop? Are we in a housing bubble? That's something we hear all the time. We're not in a housing bubble, at least in Texas, we're not, because the appreciation has been so steady and consistent year over year in Texas that there is more demand than there is actually supply on the ground. That's how you know it's not a housing bubble, because the demand is greater than the amount of products on the ground. So what happened was years ago, and it's really started in 2008, 9, 10, 11, when the banks began to freeze the builders' income, not income, but their accounts and their money, and really went through a horrible time. So many builder friend of mine lost everything, man. They had their notes due, they're called, they lost their businesses, or they lost a ton of money. And so when that happened, builders slowed down the production of what you would call inventory spec homes, the homes that they were building for the general public. And so what happened is now, because of the pandemic, you're seeing over the last 2 years, there's more of a demand for homes than there are actually homes on the ground in Texas, in Houston especially, and in the market you're in, more than likely. And so when you're looking at that, that is an indicator. It's not a bubble. It's really supply and demand. And I was listening to Dr. Ted Jones earlier this year, and man, I got to tell you, he says that it's probably several years before supply catches up with demand. So we're not necessarily in a housing bubble, depending on the market you're in. There is just a great demand for homes in today's marketplace. So one of the talking points is home sales are expected to increase another 6.6% in 2022. It's a great talking point. Here's one I love too. There are now 45 million millennials aged 26 through 35. that are the first-time buyer age. And what that means is you've got millennials, 45 million of them, that are hitting the market. They're literally at the age where they are interested in starting to look at homes. And it doesn't mean that all of them are going to go buy homes, but what it tells us is that they are in that prime age of buying their very first home. And so I think it's a great stat. There's 45 million millennials age 26 through 35 that are first time buyer age. So when you're having the conversation, it's not a year of discouragement. Yes, rates are going up. Yes, they're rising rapidly. But in today's marketplace, as appreciation continues to gain at 21.5%, affordability continues to drop to literally age, you're looking at on the affordability 21%, with incomes only going up 4.4% in a rising rate environment. Now is the time to buy. So I'm using these talking points and conversations with my realtor offices, my broker offices, with my team, with my loan officers, my loan partners. Why? Because these are the talking points that not only help you sound educated, but help encourage the market that this is going to be a banner year, that now's the time to buy, that now's the time to keep moving. Rising rates, but appreciation far offsets the rising rate. There's a couple of more. I got two more. So builders continue to ramp up production, increasing single family starts by 5.5% in 2022. That is a great stat that you're looking at. Number 9 is builders continue to ramp up production, increasing single family starts by 5.5% in 2022. So here's another one. This will be the last one. Rising rents are projected to rise another 7%. And so rent rates are going up in today's marketplace. When you're having conversations with renters, are you aware not only have they gone up, but in 2022, they're projected to go up another 7%. Wouldn't it be better to get into a home, gain the 21.5% appreciation nationally, freeze in any kind of a cost that would be associated with that way? The affordability factor of a home today is far better than it was or will be in a year from now. So these are great talking points in today's marketplace. So let me give you an example. I'm going to go back over year over year appreciation, 21.5%. Affordability declined 21%. Home incomes increased only 4.4%. We're in a rapidly rising rate environment because of the Fed's tightening monetary policy and the arch enemy of mortgages, inflation. Buying power to fall in 2022 by $25,000 to $52,000 for the average purchaser of a home. Average home incomes holding at 69,800. Home sales are expected to increase another 6.6% in 2022. There are now 45 million millennials aged 26 to 35 that are of age to be able to be buying homes. Builders continue to ramp up production, increasing single family starts by 5.5% in 2022, and rising rents are projected to rise another 7%. These are great talking points and conversations you can have on a day-to-day basis with your agents, your partners, your friends, your family. These are conversations that help you be more educated, to help educate and give a clear path and a clear plan for your friends and family and the people we're helping and service in this market and industry. So I really wanted to jump on a quick podcast and share that with you. I hope this helps. I do want to say thank you again for everyone who's given a review. Man, listen, here's one of the things I want to encourage you. If you're not already subscribed to the podcast, click subscribe. That way you get every episode. It comes directly to you. The second thing is this. Share it with somebody that you know may help. Maybe you've got an office manager, a branch manager, a loan officer, a loan partner that needs to understand, hey, here's some good key talking points that if you get this in bullet points, you can have really great conversations. And so I would encourage you to subscribe, share. And the last one is this. Hey, would you give us a review? I really appreciate Arconi said this. Steve, he said the Saturday script training is amazing. He completed a review of the podcast wherever he consumed content. I'm looking at it right now on iTunes, gave us a 5-star review. And man, Coney, I just wanted to say thank you, brother. for giving us a review. He said, the Saturday script training is amazing. Steve is changing the language of the loan originator, calling scripts planned conversations or conversations by design changes the way we should think about scripting. People who say they don't like scripts don't understand the value of consistency in speaking to clients. And so I've just got to say, brother, thank you for giving us that 5-star review. And if you would be so kind as to give us an honest, honoring review on the podcast, I personally would really appreciate it. It helps us get the word out. And if you'll send a copy of that review, just take a photo of it and send it over to support@themarketinganimals.com. Support@themarketinganimals.com. We want to put Carl White's book in your hands. So send us a picture of the review you gave with your address, and we'll mail you a free copy of Carl White's book. Loan Officer Champions would love to put it in your hands for giving us an honest review. So thank you for that. As always, I am honored, and it is a pleasure to be on this journey with each one of you as you listen week after week. If there's anything I can do, if you've got any suggestions on topics, send it to support@themarketinganimals.com. And I want to continue to be a part of your story. Also, hey, I'd hate to get at the end and not say this. If you need help, you want a plan, you want a way to know how to build your 12-month goals, and then what does that look like in the next 90 days? Go to freedomplanningcall.com. We'll book a free coaching demo. Would love to help you build your next 90 days and 12-month plan so that you can have your best year ever in 2022. And remember, with this, anything worth doing is worth doing badly. Just get started. See you on the next episode. See you.